Great, thank you very much. Ooh, better sit close to the microphone. My name's Mardi MacGregor, and I am a partner at Fox Williams, which is a full-service business law firm based in London. I'm a financial regulatory partner, and I do things like banking, investment services, insurance, but I've got a specialist interest in crypto and tokenization, which is why I'm here today. As you can see from the slides, we have a wealth of expertise here, both in traditional finance, investments and assets, but also really a deep understanding of disruptive technology. So without further ado, maybe I can ask the panelists to introduce themselves, starting with Peter.
Sure, thank you. I'm Peter Coates. I'm the head of investments for Kimura Capital. We're a traditional finance, trade finance specialist, so I guess TradFi square in terminology. We are focused on lending to commodity traders, commodity producers, very short duration loans, SOFR plus types of returns. And in terms of the digital space, we are interested in probably three areas. One is using DLT and blockchain in terms of the process and efficiency, scalability, particularly in settlements around some of the loans and cash collateral. Second aspect is we've had discussions with some of the CBDCs and other groups about providing our yielding asset on a short duration basis to enhance yields for digital currencies and other assets. And then the third aspect is tokenization, which is the purpose of the panel.
Great, and Dan?
I'm Dan Schmerin. We started one of the earliest venture studios focused exclusively on the NFT ecosystem called Metaversal. And through that, our mandate is helping to reshape ownership through tokenization and decentralized technologies. So we end up building products and solutions or incubating businesses that we think are the future of tokenization of culture.
Great. Duncan?
Hi, I'm Duncan from Aberdeen. We're a global asset manager, and I lead the digital asset business. Our digital asset business strategy is quite broad, so digital asset investment products, crypto products, tokenization is a big theme for us, and then we also have some strategic investments and operation in digital asset infrastructure.
You'll just heard from me, but just quickly again, Brian Mahoney, VP Business Development at Thesis. We are a Bitcoin venture studio, sort of like a fund of funds, and we not only invest our own capital, but also put talent and resources behind products that we like to see around Bitcoin to solve major use cases, things like on-ramps, bridges, stablecoins, these types of things.
Great, thank you. So as you can see, we're here to discuss tokenization at an inflection point and the role of tokenization in a Bitcoin circular economy. So I guess diving straight into that, are we actually at an inflection point? Are we at a turning point? Peter, what do you think?
Yes, but we've been at an inflection point for at least 3 years. Prior to joining Kimura, I co-founded a business, a regulated fund platform in Abu Dhabi under the ADGM rules and regulations and authority. And the thesis behind it was tokenization. We actually set it up at the time as a hybrid platform, so you could come and register your funds on the platform, or you could tokenize those funds on the platform. The reality is, I think we preceded the virtual asset regime in ADGM, so we actually spent a lot of time working with the regulators, and they're very friendly, very proactive regulatory jurisdiction in ADGM. But we spent a lot of time actually looking at the rule book, walking through the rule book with the regulators, explaining the technology, and then explaining what the processes, controls, and all of the areas were that they'd be interested in from protection of investors and capital. So in a regulatory environment, it was difficult. I would say now it still is difficult, depending on the regulator, depending on the, I guess, the asset manager. The regulated asset manager needs to put a lot of time and effort and cost into going through the regulatory process in a tokenization or virtual asset environment.
Interesting. And Duncan, what are you seeing in the asset management space? Do you think we're at a turning point?
Well, I agree with Peter. It's taken a while. I think things have been painfully slow moving, and particularly with corporates and large institutions, things tend to take longer than we would all hope. I am quite excited about this, for this year and next, just because there have only been a handful of live tokenization projects in the market. Most of what's gone on is proof of concept stuff, but I do feel like a lot of our peers are moving towards that kind of the live phase now. They've done their testing, and we're going to start to see more things come to market. That's certainly what I'm hearing. So, inflection point, yeah, I think potentially. I think what you'll see is maybe a little bit of FOMO as well, and more people wanting to bring things to market. And as you know, it will almost be, my expectation is a little bit exponential in that, as you have more and more product coming, you're actually going to see the demand on the other side.
What are your thoughts, Dan?
I think it's fair to say that we're at an inflection point, but it's a different inflection point. So, in 2021, when my father asked, what inning are we in, for his baseball analogy, I said, we're not. It's still batting practice. And today, we're probably in the first inning. But if we think about the presentation we just heard, the innovation that's happening around the Bitcoin ecosystem alone, and that's just one piece, happens to be the biggest ecosystem, but it's just one piece. It's pretty remarkable to think that at the end of 2022, the notion that we at Metaversal could help inscribe items onto Bitcoin, and that it's not merely a store of value, it could be more than that, was inconceivable. And you fast forward, as he points out, less than 12 months later, and you've had nearly $5 billion of transacted value. So if you don't think that that's an inflection point, then you need to show me other consumer startups that have that level of traction, because they haven't existed before.
Sure, that's a great point. And
Yep.
so I guess we should come to Brian.
Sure.
What do you think? And can you say a bit about tokenization and the Bitcoin circular economy?
Yeah, sure. Well, so Thesis has been, actually, we started back in 2014, so it's been over 10 years. We're just now starting to invest in the brand. Historically, we've mostly been investing in our portfolio projects and the spin-outs over the years. But I will say I have not seen a level of this excitement from a capital, talent, time, attention, allocation perspective. Personally, I've been in the space since 2015. Bitcoin and this sort of tokenization category in general is totally, it is at an inflection point. The data shows it. 5 billion plus market cap for Bitcoin NFTs in under a year is pretty remarkable for an entirely new category. And that has really been this unlock moment for Bitcoin. It's brought developers back to the Bitcoin chain, the OG chain, which in my view is massive for the space. We've gone through a bit of an S-curve in terms of adoption, right? We're kind of out of the trough of disillusionment now. And really there's this upswing that I think the sellers are out of the market post-halvening, or at least the ones that with lower conviction. The builders are back. Capital and venture investors are here. They're investing in this space like nothing I've personally seen in terms of size of rounds, valuations, pre-public market launch. And there's people looking for real use cases to put their capital to work in a tokenized way. And all that's missing really is the infrastructure that's been in place, but scaling that out. And so that's what we're really focused on at Thesis, is building the tools first and foremost for ourselves that we want to see in the space and going from there.
Great. And so maybe we can talk a bit about the role of tokenization. Peter, what do you think the role of tokenization is, or what should the role of tokenization be?
Well, I think we need to differentiate between cryptocurrency and tokenized real-world assets and funds. The latter is my kind of TradFi expertise, and it is in a regulated environment, so it does make things a lot more complicated, a lot more difficult. And yeah, the reality is most of the investors in real-world assets and funds are of a older generation versus the crypto generation. So the terminology is all different. Yeah, wallets, custody, all of these things are new terms to the regulators initially. I mean, they're obviously learning. And to a lot of the investors and institutions. I think the theory behind tokenizing funds and assets is, to create fractionalization or access at a lower minimum level of access. So you could buy a 20-story building, or you could buy a token, which is attached to a 20-story building. So you've got that fractionalization and access point. The other aspect, I guess, or supposed benefit is transportability or interoperability and liquidity. Well, the reality is if you're in a regulated environment, you're still hampered by different regulations on a global basis. So if I was to create a Abu Dhabi-based tokenized fund, which we did in September 2021, fully regulated, fully tokenized, well, how do we actually market that or allow for a secondary market transaction to a Hong Kong investor? Well, we've got to make sure we're dealing with the right counterparties, right KYC, qualifications, all of these different aspects in a regulated environment. And it becomes difficult when you don't have a harmonious regulatory regime on a global basis. If you think about, and obviously your background is compliance and the legal aspect around that, if you think about the introduction of UCITS or MiFID or AIFM or AIFMD, and then differences with the SEC, it takes a while for these small changes in traditional regulations to be understood globally and implemented globally across different borders. When you suddenly throw in these new virtual asset regimes from Malta, Abu Dhabi, Caymans, Belize, everywhere else, how do you expect the regulators to really catch up to this? And one of the panelists earlier, Francesco, I know very well, said that regulation is dynamic. Unfortunately, it's very slowly dynamic. It does change, but it moves very slowly. So I think all of these different aspects just make it difficult. Difficult to get liquidity. And demand, as I saw, so to your point, in Abu Dhabi, we launched, I would say we're in the first innings in terms of your baseball terminology, but it hasn't really changed from there. We issued a regulated tokenized fund. We just didn't see demand. Sorry.
Yeah, I think that's very interesting and certainly tallies with my experience as a regulatory lawyer.
It's good for the lawyers.
Yeah, I mean, yeah, sometimes. But I think, in a Brexit context, it, exacerbates that problem, doesn't it? Because at least we used to have kind of Europe-wide regulatory framework, and now we can see, at least in the sort of pure cryptocurrency space, it looks like we're now slightly lagging behind Europe and the introduction of MiCA, and we're kind of scrambling to catch up in the UK. So there's a lot of opportunity, but a lot of challenge as well. Dan, we've previously discussed tokenization of culture. Can you say a little bit about that idea and some of the benefits that tokenization can bring?
Yeah, I mean, and I could pick up on what Peter was just talking about. So why haven't tokenized funds really taken off yet? KKR has tokenized a healthcare fund. They're one of a number. Because it's not sexy. And because the crowd that has been most attracted to digital assets normally is under 39.
Yeah.
And what that crowd, which a panelist earlier today was talking about, he or she who is a Gen Zer, Gen Xer, will become the bulk of the inheritors and the wealth creators. So it's just a matter of time. They are digital natives. And they're passionate about culture. That's what they focus on, and that's why we are focused on where the demand is currently and how we think that's going to influence their decision-making in terms of investing in the future. You don't hear those generations excited about investing in commodities, but they are investing in collectibles. They are investing in experiences. And so the takeaway for those who are assembled here is everything in civilization is going to get tokenized. It's not going to happen this year, probably not next, but over the next 2 decades, everything you can think of, ticketing, vehicle titles and registration, real property, this building will be an NFT, right? Because it's one of a kind. Every piece of real estate is going to be tokenized, and it's going to happen because there are benefits around taking that which is historically illiquid and making it more liquid. But in terms of where consumer demand is today, it's not interested in the staid, the boring. It's not interested in what Adia is looking to invest in. And they are just one, albeit very big investor. And I think it's coming, it will come, but not in 2024.
Sounds super exciting. Duncan, I know part of your role is building crypto investment products and overseeing strategic investment. Can you say a bit about the tokenization products and investments that you're seeing in your space?
Yeah, definitely. And actually, it kind of links back to that last point. So I agree on the demographics completely in terms of, maybe they're not the right products for the market today. But I also think that the asset management industry needs to do a much better job at actually taking their product to market. There's been a little bit of build it and they will come attitude. So the products are being offered kind of on islands, and you expect consumers to come in there. I think we need to do a better job at connecting into the existing rails and offering tokenized investment through the traditional channels, through wealth managers, through platforms that exist today, which means integrating new tech with old tech, which we've found interesting. But in terms of our strategy, I guess that's been our mindset. So we invested in a UK-regulated digital securities venue called Archax a couple of years ago. So we're their largest external investor. And that was really our distribution channel. So they've got the regulatory permissions to offer regulated tokenized investments out to professional investors. And we see that as our main distribution channel for tokenized product. And then we selected an enterprise DLT called Hedera Hashgraph to build on, because we felt that some of the characteristics of that DLT and the governance framework would resonate very, very strongly with our client base, or our prospective client base. So we are working towards that. We are trying to solve for that problem. I also think that we need just generally more product, because nobody's going to come to a venue with only Aberdeen product. I guarantee it's like going to a grocery store with only craft or something, like that. I think we need more
mac and cheese.
Well, who doesn't, I suppose? But we need more asset managers with more product for this to be a success, I think.
And Brian, what are you seeing in your space? What buyers are you seeing? Who's interested in this?
Yeah, well, Dan made a point about commodities, and that's sort of the unsexy asset class, for the Gen Z millennial generation. Well, Bitcoin is a commodity. It's sort of the one that's got the clearest line of sight at least from a regulator point of view. So we're focused on actually tokenizing Bitcoin right now. And tokenization, in our view, there's a couple ways to think about it. Off-chain to on-chain is one way. And why would you want to do that? It opens up. For me, I got into crypto. I was a former banker myself. Used to work actually here in London for HSBC. Then I found crypto, and the rest was history. But why I got into it was the potential for democratizing access to financial systems and really building wealth in the internet age. Information is ubiquitous now. Pretty much everyone has the internet or access to it at this point. It is a commoditized technology, right? And so it would only make sense that the opportunity to build wealth in this next sort of evolution of the economy and society is digitally native. And that's really what on-chain or blockchain itself unlocks. And it started with Bitcoin, and it's sort of evolved into many other types of digital assets, and now there's thousands out there, right? And we've looked at tokenizing off-chain assets, but it's a lot harder. It takes a lot longer time to make it happen. And the regulatory clarity hasn't come as soon as we would have liked. It continues to remain gray. But there is some assets that have received it, and Bitcoin is one of them. And so for us, we have sort of a beachhead, go-to-market approach of tokenizing Bitcoin first. And what I mean by that is continuing to proliferate Bitcoin itself across all these different chains and ecosystems, and scaling up the Bitcoin asset class in general, making it more usable, more transformable, and other types of ways other than just sort of the speculative HODL-based use case, which is a great start. It's created a tremendous amount of wealth and value. But for me, I'd love to be able to issue a stablecoin or get dollar and maybe even issue a mortgage and use my Bitcoin as collateral, right? So that's really where we're going. That's the ultimate kind of North Star vision for our tokenization-based use cases.
Great. And Peter, you've mentioned that you've got experience obtaining regulatory authorization for a tokenization platform in Abu Dhabi. And I know the previous panel touched a little bit on regulation in this space. What do you think the role of regulation is here? Are we at an inflection point when it comes to how this space is regulated?
The role of regulation is vital in the fund and investment and security space. And yeah, it will never go away, and we have to work with it and move with it. I think that part of the complication, and to Duncan's point, I agree, asset managers need to do more and actually get product out there. And we have looked at it from Kimura's perspective. So we have average 65-day duration loans. We could tokenize the loans. We could tokenize a loan facility. We could tokenize an SPV or a fund. We are generating cash plus, let's say, 4 to 8% for investors, so not unattractive in a BBB rating environment. But when we have looked at tokenizing something, the difficulties we found are our lack of resource from a compliance and legal perspective, the fact that we are currently regulated and aim to be regulated by the FCA. So do we have to come under the FCA's virtual asset permissions as well as our current permissions? The fact that our investment vehicles are in the Caymans, do we have to come under the Cayman permissions? It becomes very complex. So one of the approaches I've taken is actually, I know Yarchak's team very well. I used to work with the founders a long time ago, and they're doing a great job of building a fully regulated capability. One of the things I've looked at is how do we as an asset manager just do what we currently do, but given our knowledge base, given our willingness to do tokenized assets or funds, how do we work with an Archax to issue a tokenized version and to distribute that tokenized version? And that's, these are ongoing discussions, but again, time, resource become a little bit difficult. But once you're in the regulatory environment, you're in it.
You're in it, yeah, that is certainly true. Duncan, what are your thoughts on this? What are you seeing in the asset management space?
Like before, I mentioned before, I've seen a lot of a move from proof of concept to kind of real product in the market now. I think, I mentioned some of the difficulties we had before about integrating old tech and new tech. That's particularly true with some of incumbent service providers within our funds. Some of the low-hanging fruit I see for asset managers with blockchain in general is reducing operational costs, back office, middle office costs in their fund and their mutual funds. But it is difficult to go and to try to integrate the kind of blockchain into with the existing administrators, existing custodians, and auditors. But more and more we're seeing them have their own internal programs to develop solutions. So I'm quite hopeful that's going to change, and overall that's going to deliver a better value to the end investor, because they're going to have less performance drag from operational costs, and hopefully at some point we're going to have end-to-end on-chain investments that will bring benefits for all.
Dan, what are your thoughts on this? Is there a US perspective?
Yeah, I think the U.S. perspective is that we'd like to do stuff outside the U.S.
Agreed.
And I can say that having served in Washington early in my career, you know, the easiest answer inside the Beltway is no, or not right now. And that's unfortunate at a time when the U.S. has an opportunity to really propel in, you know, this entire ecosystem plus AI, because we know we have an advantage when it comes to AI over the rest of the world, and yet, you know, the regulators are forcing compliant U.S. businesses to operate with one hand tied behind their back, and sometimes both hands tied behind their back. So it's not a hypothetical, you are seeing businesses move elsewhere. I just came from UAE. It's not because it's a close flight from New York, it's because their regulators have a very different approach to engaging with businesses that want to be compliant. And all you need is to set standard rules of the road, and businesses will then funnel in. But if it's through enforcement actions instead of a willingness to actually, so we've engaged, we participate in a CFTC working group on trying to establish standards for NFTs, but you have a dogfight right now between two regulators, SEC and the CFTC. And that makes it very hard for third parties to come and say, well, who should we be speaking with? Because we think it's a commodity, right? We think that the underlying asset, however you treat that in the physical world, should be equally treated in the digital arena.
Yeah, absolutely.
Time will tell.
Makes sense, and I think we've seen a similar thing in the UK, and I think, at least in terms of my practice, this is the first year where things do seem to be slightly changing, and there's been a lot more a lot of the smaller businesses coming for advice in this area, and I think it's a really positive thing.